What's up, everyone? Welcome back to the channel. We're back on another Friday with Fabian. We have a lot to discuss today because FOMC, I think, was a lot bigger than people think. The ramifications could be absolutely huge for markets, but I think it's flying under the radar of a lot of investors. So we're going to discuss that today, what we think heading out of the FOMC. We're also going to discuss some of the major developments that are happening from a macro point of view. There are some major things that are happening to liquidity, which we have to discuss because it's going to, I think, really set in stone the path for 2026 from a macro point of view. And we'll discuss the implications that can have on crypto. Then we are going to discuss why Bitcoin is lagging. And later in the video, get into some of the trades that I've taken over the last few days. And I'm sure Fabian has some stuff up his sleeve as well. So Fabian, welcome back to the channel.
Yeah, thanks. And like you said, pretty big week here following the FOMC. So I'm excited to break that down.
Looking at the Bitcoin chart, you wouldn't think it has been a big week because it's basically just ranging sideways. You still have this, I guess, like wedge pattern forming. It's, I mean, technically making higher lows and kind of making higher highs. We are maybe getting a lower high now, but basically just been chopping. But I think what's important or more important to do is actually step back and take a look at what has actually happened with FOMC, because that can be a bigger driver of markets over the coming months. So why don't you take it away and give us your take on what happened at FOMC and what you think the implications will be going forward into 2026?
Yeah, so I guess just to recap everything first, going into the meeting, expectations were pretty overwhelmingly for a hawkish cut, right? So everyone knew that they were going to do a 25 basis point cut. But the sentiment was that it would be paired with hawkish talk from Powell, basically counterbalancing the fact that they cut in the absence of, data that would help them to do so going into this meeting. I remember we mentioned that last stream as well, last Friday. But that had become the overwhelming consensus going in. And Powell did actually reinforce the view during his speech that the Fed essentially believes that rates are at a pretty good place right now. And from this point forward, they will transition to being more data dependent. So we are unlikely to get a continuation cut in January, probably even the next meeting after that in March, as we've been missing a lot of really key data for the past few months. And from this point, they kind of want to see more before they cut again, right? But the silver lining here, so basically they did do a quote unquote hawkish cut in terms of the narrative behind it. However, like I said, number one, markets were already pricing that in going into the meeting, right? And even when you take a look at the market implied rate cut odds, which is, in the table that you have up on the screen there, markets were only pricing in 2 cuts over the entire 2026. And just before this meeting, there were actually 0 more cuts priced in over the remainder of Powell's term. So markets basically already were pricing in that this is going to be Powell's last cut. And then on top of that, Powell did kind of also downplay inflation, both in his speech as well as the summary of economic projections that they released alongside this meeting. And they kind of shifted towards a more incrementally dovish outlook for inflation. So that was a little bit of a positive that markets picked up on. And I don't know if you caught the meeting live or, Powell's talk live, but I really did feel that his overall tone was pretty soft, despite the fact that, he kind of put his foot down on more rate cuts from here. He seemed a little bit soft and not that stern about it, right? And I really do think markets picked up on that signaling. Everyone knows that Powell was kind of playing hardball with Trump a little bit over the past few months. He was putting his foot down, kind of standing his ground. But I personally feel like his rebellion phase is over now, right? I feel like he's only got like 4 or 5 months left in his term. Does he really want to go out and cement his legacy when he leaves as like the Fed that caused issues in the market, or the Fed chair that caused issues in the market? I don't think so, right? He's almost out the door. I think he's going to play nice from this point forward, and you kind of heard it in his tone. So basically, to recap, despite the fact that, they're alluding to maybe a pause in cuts from this point forward, that was already priced in. And overall, he sounded pretty dovish about, keeping the door open again in the future. So overall, didn't disappoint markets' expectations. And then, of course, we had that really big surprise announcement with RMPs, or repo management purchases, reserve management purchases, which surprised market expectations dovishly in terms of both the timing and the scale of them. And we could get a little bit into that, but in a nutshell, that's basically where we stand after the FOMC.
Before we get into the asset purchases, because I actually think it's quite a big one, let's just go back to the dot plot here, because something we discussed on last week's show is the possibility that markets could be underpricing cuts in 2026. And if you look at it here, there's still nothing to suggest that the probability would be a 275 to 300 or a 250 to 275 bips rate next year. So that maybe suggests that there is some headroom to cut further, but what do you make of that situation as a potential catalyst for markets heading into H1?
Yeah, like you said, I'm personally leaning closer towards 4 rate cuts next year as opposed to 2. So not just one more, but potentially a whole 2 more. That's my personal view on the thing. Even if I'm wrong about that, I think at least 1 more. We can easily push that down to 3. And that leaves us with a pretty bullish setup overall. Like that would be, positive expected value from here, in the sense that you really don't have a lot of room for this to move down anymore, but there's a lot of room for it to actually improve, right? So
why do you think there's going to be 4 instead of 3?
So just in general, right, 4 from where we are today would take us to right about where the Trump administration, both Trump and Bessent, and Hassett himself, so the runner-up to be the next Fed chair, he has kind of alluded to being on the same page as them in terms of this, which is where they think more or less the rates should be towards the end of next year. And obviously, we know with midterms coming up, with Hassett getting into the seat, especially the first few months that he's Fed chair, I don't think he's going to want to really push back on, what Trump wants going into midterms. And so I think they're all going to play ball, right? And we'll get closer to that. That would imply 4 cuts, but at least 3 would bring us close enough. But I think 4 is definitely on the table to get to where they want to be.
What was the lowest rate in 2021? Can you remember that we got to?
I think it was quite literally 0. I mean, that was a while ago. It was like quite literally at the 0 bound, either 0 to 25 or 25 to 50 bips, something like that.
Yeah, so basically we're heading back toward, obviously not to 0, but towards that territory, as you can see throughout 2026 and 2027. Interestingly, the expectation, obviously this is just a probability map, so it changes based on each FOMC, but the expectation for July 2027 is that we hit that target you're talking about. So you're basically saying this expectation is going to be front run potentially a year earlier.
Yeah, I think so. And, just looking at it from like a balance of probabilities, even if we don't quite get there, again, I think, generally this curve that we're looking at has more room to improve than go the other way around. Like, I don't see how it could get worse from here, and it could only get better. And so that's a bullish setup, right?
I want to now talk about what you mentioned before, the asset repurchases. So could you explain what this is? Because some people are saying it's basically like a silent QE or a hidden QE. Why did the markets react positively to this, and what do you make of this plan to buy back T-bills?
So yeah, I personally think like a lot of the discussion around, whether it's not QE or QE light or whatever you want to call it, that's all really just semantics. I don't pay much attention to semantics. It's like, okay, by the technical definition, it's not QE, right? So QE entails purchasing longer dated treasury bonds for the Fed's balance sheet. Now, granted, they did push the duration out more than markets expected. So we were expecting them to announce a purchase of T-bills, which implies basically treasury bills with a maturity of 1 year or less. They actually opened the door to purchasing up to 3-year treasury maturities. So they did push it out a little bit more. But at the end of the day, despite all that semantics, it's not quite hard QE, but it is incrementally liquidity positive. And essentially, the main concern that I had, as well as many others, and I do think I've voiced this on previous streams too that we've done together, but the main concern going into next year was that we were starting to see real strains in liquidity, or specifically repo markets, and that's interbank lending markets. And that could have very well caused a few bumps. Even if the overall macro picture is bullish, you could get some hiccups from that, which ripple into the broader system and affect financial markets. And so what the Fed essentially did was they stepped in preemptively, ahead of time, and basically backstopped that. And so they essentially, in my opinion, cut off that left tail risk from the possibility of something like that happening into what I think was already a very, very bullish and positive macro outlook for 2026, both from a growth perspective. I basically think we're in a pretty Goldilocks type of environment for macro, where we have strong growth propped up by the government, supporting the private sector, and as well as inflation looking to stabilize from here on out. And we did already have a lot of liquidity impulses coming down the pipe, fiscal impulses going into midterms, as well as more dovish monetary policy from the Fed reform coming into, let's say midway through next year. And so this is all really kind of like adding fuel to the fire, you could say. They cut off the tail risk, everything was already good. And it wasn't even really necessary in this size or this magnitude. So it's just at the end of the day, pouring more gasoline on the flame, which is a good thing for asset markets.
We can see like equities are still performing pretty well. Like S&P, I believe, hit a new high. Nasdaq slightly lagging because some of its top performers like Google have just come down a bit because they went on very explosive runs. But Bitcoin has been lagging. What do you make of this lag? I mean, at the end of the day, it has come off quite significantly from the bottom. What's it sitting at now? 14% up. So clearly some of that MicroStrategy risk has been priced out of the market, and we've seen actually MicroStrategy stepping back in and buying. We've got some buying on Ethereum, which we'll talk about later. So that's helped. But overall, still painting a very different picture from the current picture on the S&P at the moment. So yeah, what do you think of this discrepancy and the fact that Bitcoin isn't really reacting from a macro perspective to what is, like, I would say, a pretty good set of macro conditions?
Yeah, it's almost the perfect storm for Bitcoin, or at least in theory. And we're actually seeing that play out in other markets. So we're seeing confirmation of the fact that long tail assets in the rest of the market also like this. So we're having commodities rally on the back of the FOMC meeting, gold, silver leading the way, right? And even laggard commodities like copper starting to catch up. And then we're also getting a broadening out of risk within equities in terms of money flowing down the risk spectrum into small caps, right? So you could even pull up like the Russell 2000 chart there, right? Ticker would be RUT or IWM for the ETF. And we can see that while the S&P and the NASDAQ 100, so mega cap tech, are still under their all-time highs, the Russell has broken out really strongly to new highs, right, following that meeting. And that's a extremely positive risk-on signal, which should benefit Bitcoin as well, in theory. Now, like you said, to many people's frustration, it has been lagging. And I personally, at least at this point, I just chalk that up to essentially a lot of structural and psychological damage has been caused in recent months, right? With the price action, with the post October 10th liquidation fallout, with some of the supply overhang from miners and DATs, et cetera, et cetera. And historically, that's just taken time to work through, right? So we've seen in previous instances where Bitcoin has pulled down this much in the past, so towards the extreme ends of its pullbacks, that it's taken at least 2 or 3 months usually to work your way through the chop before you get the next really big move. And so this isn't really too surprising to me just yet. But I do think that as long as it continues, as long as the rest of TradFi markets, equities, commodities, etc., continue to react positively into next year, that it at least provides a floor for Bitcoin, and it's only a matter of time before we eventually see a bigger catch-up move. That's my opinion, at least. Curious to hear what you think about that too, though.
Yeah, I mean, well, historically, when Bitcoin has led, equities will catch up, and then it'll kind of, they'll kind of play cat and mouse. So, equities might lead for the next period, and then Bitcoin eventually should catch up. As you said, I think you're spot on. Like, there's just been overhang that isn't present in other asset classes that's been present on Bitcoin, with the DATs, with 1010, with whales selling. Like there are all these other dynamics, miners that come into play that affect Bitcoin structurally because it's, a singular asset. Whereas when we look at these indexes, they're indexes of hundreds or thousands of assets. So I think like if you see equities going higher, which is what I'm anticipating next year, you should see uplift across the broader crypto sector. We're already seeing that a little bit with Ethereum, which I want to discuss today as well. You can also see the dollar is coming down, which is good. Historically inversely correlated with risk assets. So this is looking like a lower high now on the dollar on the weekly. So we potentially might come back down and run the lows, and that would also bode well for markets. So nothing seems to really be broken from a macro point of view. I just think it's a painful time and a very boring time to be holding crypto because everyone's kind of waiting for this big pump. But I think it'll catch up after equities finish their, I guess, local run. I think there's a lot more, and I'm interested to know what you make of this. But there's kind of a large contingent of the market now, which I still feel like a little bit wary about Bitcoin. So if they want to jump back into risk, they're going into like NASDAQ instead of going into Bitcoin. A lot of the traders since 1010 have moved away from crypto and they're moving into equity. So it's kind of this self-fulfilling prophecy. It'll eventually end in a rotation, but like there's just not as much interest and volume in the crypto space right now until there's a crypto specific catalyst, and then you'll probably see those people come back.
Yeah, definitely. Like I said, it does take time to work through from a psychological or like behavioral standpoint as well. And also just the fact that like structurally, to add on to what you said, we broke down through a bunch of support. And so that support now looks like resistance being retested from under. And so I don't know about you, but I'm seeing a lot on crypto Twitter that whenever we make a couple thousand of a move higher, like a few percent on Bitcoin, everyone starts calling for, oh, we're contending with this resistance, we're contending with that resistance. And that kind of just takes time to work through too, right?
It plays on people's minds because you're constantly coming up. I mean, look, just to kind of frame the bullish narrative for crypto, though, beyond the macro stuff, because macro is the driver of markets, and I think people see that next year. But even more broader than that, you do have some very strong adoption catalysts. Like, imagine this scenario a year ago, like the SEC chair actively vouching for crypto, actively pushing crypto forward. Paul Atkins, he said, you ain't seen nothing yet. SEC Chair Atkins signals quick action on crypto priorities in the new year. So he's quite pro-crypto. You can see this tweet here. US financial markets are poised to move on chain. Like these are big statements. Under my leadership, the SEC is prioritizing innovation. This was just today, actually, and embracing new technologies to enable this on-chain future whilst continuing to protect investors. And then you also saw the SEC gave the DTCC, the $100 trillion backbone of US markets, the okay to tokenize stocks on the blockchain. And then we also saw a couple of days ago, Jamie Dimon coming out from JP Morgan saying that blockchain is now becoming more effective and efficient, and that they're working on their own stablecoin and exploring tokenization. This obviously comes about a year after BlackRock really pushed into that as well. And obviously recently we've seen Vanguard start to offer crypto ETFs. So it seems from an institutional point of view, this is like the most bullish setup we've probably ever seen for the crypto space. Like even when price was rallying much higher, like a year ago, you had Gensler like actively pushing back. And now you have an SEC chair who is actively pushing for crypto. So the setup to me seems really strong, not only from a macro point of view, but a fundamental point of view.
Yeah, 100%. I agree. I think, the adoption cycle is still kind of midway through in terms of institutional adoption and global adoption. And from all of the things you just pointed out, one common theme across all of them is actually tokenization, right? And so when I see all of this, one of the first questions that pops into my mind is how do I get long tokenization in particular?
Definitely. And what have you concluded?
Yeah, well, I'm always kind of actively looking into it, but on the equity side, I am actually favoring two plays currently that kind of tie into the theme of tokenization. One of them directly, one more indirectly. So the indirect one is Galaxy Digital. I think that overall they're very well positioned to capitalize as a leader in the trend of tokenization. They have very, very deep connections, which gives them a kind of moat in terms of institutional relationships. And we've already seen them enter into the tokenization space, providing services to help tokenize equities and other TradFi assets. And I think they're only going to ramp that up. And in general, I've always liked Galaxy. I've always held a position because I just think it's very powerful that they sit at the intersection of crypto adoption in the institutional world, as well as AI, right? Having recently transitioned to building out AI data centers, which should start rolling out in the first half of 2026. So there's Galaxy. And then a more direct equity I've recently been looking at is Securitize, right? So that
I
might
was
be a
just bringing
familiar
this up
name.
as well. Yeah.
Yeah, you got it. So they're currently trading as a SPAC, which, yeah, you have right in front of you there. The ticker is CPT. Now, the only problem with a SPAC, I did trade a lot of SPACs back in the day, going back to the SPAC mania of like 2021 and kind of followed them after that. And a lot of the time, SPACs don't really move a whole lot before the merger. Most of the time. There are exceptions, but they can be kind of slow. And that could translate into opportunity cost. So I haven't jumped on it quite yet, but I do think around when they go live, which I think just going off of memory was supposed to be sometime like mid next year, where they're supposed to merge and go live on the NASDAQ. And around then, I'd be more interested in getting in, but I think they could be one of the strongest pure play exposures to the trend of tokenization.
100%, because they've done all the big funds like with BlackRock, and they have support from Morgan Stanley as well, Archivest, Parafy. So this is the big play, probably the big TradFi play to get exposure. And I think where the market is in general, in terms of the general public wanting to get exposure to tokenization, stuff like this I think appeals to them more because, as I mentioned before, like a lot of people have kind of shifted into the equities playground. We've also seen, at times, Coinbase and Robinhood and these like crypto affiliated stocks also performing really well and actually like leading the crypto market overall. So I still think there are crypto specific plays that will do well. I've got one that I want to talk about in a sec, but I think the equity plays are definitely worth looking into, alongside obviously the major blockchains like ETH, Solana should be beneficiaries of assets coming on chain. They're established networks with network effect with lots of developers. You can make an argument for Chainlink as well with the Oracle service they provide. It's needed for a lot of these protocols that are going to operate DeFi on top of tokenized assets. Another one that I think is flying under the radar a little bit, I was an early investor in this, but I think it's actually come down to a decent level, is Canton Network. They're like an institutional chain with privacy preserving features. They're, I think, back down to 2.8 bill FTV. They launched a lot higher. So obviously price is still settling. So I've got my chart up here. Do you know much about Canton, Fabian?
I don't actually know. Admittedly, I haven't done my proper due diligence in them yet.
Yeah, they also have massive backers. They've, I think, already got like trillions of dollars in TVL committed to the network. So in terms of like networks that have a liquid token trading, they're probably the biggest RWA play on the market. And then obviously, Securitize and stuff will be pretty big in the TradFi world. Canton was actually backed. I'm just getting up the data now. They were backed by Nasdaq Ventures, iCapital, S&P Global, Polychain, Goldman Sachs, Finance Labs. So a lot of the big players have backed. I think they also did like Deutsche Bank, Microsoft programs in the beginning as well. So yeah, big backers behind this. Probably the most heavily backed liquid crypto token. So keep your eye on this, because if that narrative heats up, there aren't many investable proxies, and I think Canton Network will be one of them. But yeah, that's the one I'm looking at in terms of asset tokenization. Anything else you look at right now? I mean, we could go down the rabbit hole, but I don't think it's right for today's video, because a lot of the speculative plays, there still isn't strong evidence that they are beneficiaries of this liquidity flow. You kind of need to work down, like look at the highest pick and shovels and then work down the risk curve if the narrative took off. because I made the
Yeah,
mistake in the past
definitely.
early in like RWA plays, and yeah, it could be a strong narrative for a point in time, but you don't actually see the flows necessarily being driven. Or sorry, you don't necessarily see token price acting in accordance with the flows that are being driven in because it's all based on just speculation. So you really want to invest in protocols that capture upside based on the growth of tokenization, and that's difficult because a lot of the big funds and the big players in the space, they'll try and either use their own chains or, you know, they won't want to pay like heavy fees, right? They want to be able to move their money around freely. So a lot of that value capture doesn't go back into the token. It's been, I think, the big challenge for RWA players, but nonetheless, still a space with massive potential when literally trillions of dollars will be coming on chain. And SEC chair is saying this himself. This isn't just a theory anymore.
Yeah, yeah. I think one of the cool things actually about having like one foot in each space, so equities and tokens, is that they both capture kind of a different set of buyers and a different, there's different factors pushing them. So, like you said, for tokens, they're really more based on basically narrative, right? Narrative momentum. And so they just need to be timed a little bit better. Whereas with equities, if you want to get exposure to a theme, you could probably buy and hold for the longer term a little bit more comfortably. And then when you see that narrative really picking up, let's say, sometime in the future when tokenization is a big kind of a hot word on Wall Street, maybe following the launch of Securitize, which really blows it up into Wall Street's attention, then you can look to time the token plays a little bit better too, right? But I think they're both interesting for different reasons, the equity and the token side.
100%. I think that's actually well put. Like tokens are best served as narrative vehicles. And obviously narratives can extend across different time horizons. Like you can have a narrative which is popular for like years, like perp dexes. But then there are also those shorter term attention bursts that you get when like there's a big headline. Like when there's a big AI headline, you're still going to make more money trading the crypto tokens than being long Nvidia. But if you want to be long AI over 5 years, then Nvidia is probably a safer bet than longing Tau. So you've kind of got to play both in conjunction with each other. I want to go to my ETH section now because I made a bit of a shift. So what I've done over the past 48 hours is shift a little bit more capital from Bitcoin into Ethereum in terms of my spot positioning. This is also something I highlighted on last week's show with Fabian. We talked about the ETHBTC breakout. Since then, it extended aggressively upwards and has now just started to retrace a little bit. But there's some interesting stuff here that was highlighted by Lucky. He said Tom Lee is quite personally incentivized to continue to jam into ETH into year end. He receives a 15 mil upfront payment upon shareholder approval on Jan 15th. Optically, it looks better if you have hit your goal of 4/5% of Ethereum supply pre-vote. So basically, he had his goal of hitting 4 to 5% of the ETH supply accumulation, and to get his bonus, that would bode well for him. As Lucky points out, he also gets awarded PSUs, performance stock units, when he hits 4% and 5%, 1 million PSUs of the ETH supply, respectively. With $1 billion of cash at hand, up from 800 mil last week, seems reasonable. They won't slow down until year end. The caveat here is it costs him $5 billion if he wants to hit the goal of 4 to 5%, so he might not get there. But we are like looking at the ETH chart and we're like observing the fact that this looks strong on a relative strength basis versus Bitcoin. I think this is one of the reasons why I think Tom Lee's buying and he's propping up price, and that might not actually slow down heading into the new year, which for me makes Ethereum a tad better hold than Bitcoin in the short term. But in the long term, I still think Bitcoin will outperform. You're also seeing a flip if you want to look at technicals on the daily noodle here. Finally starting to flip. And obviously we've just had the ETHBTC breakout. So I think ETH looks good. Like if you're going to be long either, I think ETH is slightly better. I feel like it has slightly less overhang as well compared to Bitcoin. But obviously Bitcoin's Bitcoin. So it obviously deserves a place in your portfolio. But just talking short term here, wonder what you make of this this thesis, Fabian, or just this information.
Yeah, you really nailed the call on that actually just last stream. And I think the ETH-BTC ratio is up since then.
Yeah.
Yeah, I pretty much agree with everything you said. I don't have a whole lot to add on top of it because I think you covered all of the dynamics that are at play right now really well. But, just in a nutshell, we're basically seeing Tom Lee jam in more money than Saylor, usually every week. Last week, Saylor kind of surprised markets with an almost $1 billion purchase of Bitcoin, but I do think that was more of a one-off. In general, Tom Lee's been going a lot harder at it. Their MNAV is sitting slightly higher than MicroStrategy's at this time. And for all of the reasons you mentioned, plus the fact that they're sitting on $1 billion of cash, I think that's kind of like very telegraphed buying pressure into the year end. And then on the supply side, so that's on the demand side. Then on the supply side, as you pointed out, they really don't have a lot of the big issues that Bitcoin is contending with maybe DATs turned AI, or sorry, miners turned AI data centers who are selling, et cetera, et cetera. So I do think we could probably continue to see it squeeze in the short term. The only one thing I'd add on to that as well is that we are potentially entering a little bit of a period where if things continue the way they are, we could see outperformance in altcoins more generally. So altcoins have underperformed Bitcoin this whole time, including ETH, or, I want to say since October the 10th. So over the past 1 to 2 months in general. And they have been showing more strength again recently, as well as the fact that, like we pointed out at the beginning of this stream, the current macro environment is really kind of starting to shift to one where risk is broadening out. So again, in the TradFi world, we're seeing small caps catch a bid. And generally speaking, that should also kind of favor the smaller caps in crypto as well, even if it's just for a little mean reversion bounce, right? For the next few weeks or couple months, whatever it is. But we are getting tailwinds from that side as well. So I could very well see ETH continuing to outperform at least into year end, if not a little bit past there. Yeah.
Yeah, and you're also seeing like dominance looks pretty weak considering what's happened. And that was one of the things that surprised me about October 10th. Altcoins actually held up in the aftermath. Obviously, they got smoked on the day. But in the aftermath, we saw dominance actually trending lower. And potentially we're getting rejected off the mid-range on dominance here. So I don't know if that highlights that alts are strong, more so than it highlights Bitcoin has overhang. But maybe it's a mixture of both. In terms of altcoins, you talked about mean reversions. Like, what stuff do you think has strong narrative potential to mean revert if there were a run on alts?
Yeah, so I do think, well, okay, so for one, we're actually seeing a lot of relative strength in Fartcoin lately, right? And I always kind of chuckle a little bit whenever I mention Fartcoin. It's like very serious industry, right? But I love it. We have our serious stuff and we have our memes too. But we are seeing a little bit of a resurgence in meme coins, I think, just with Fartcoin leading. So I wouldn't be surprised to actually see a little bit of a bounce across other major memes as well. Maybe, SPX or something like even Doge, which is sitting at some sort of high time frame support zone right now. So things like that, maybe useless coin as well, which has been, hot in recent months before the downturn. So I wouldn't be surprised to see some mean reversion across those names. That could also have effects for potentially, boosting something like a pumped off fund. So pump token, just because they're seen as infrastructure for meme coins on Solana, right? And then on the other side of that, you also have the kind of utility names with real cash flows that I think market participants are being more conditioned to buy whenever they see strength in the market. So those are things historically like Hype, etc. Now, Hype has taken a little bit of a hit recently. We've actually both talking about that. I've spoke about it in the Discord channel quite a bit as well over the past few weeks. They're facing their own issues with supply unlocks, with potential competitor tokens coming out like Lighter, as well as just volumes moving down across the perp landscape.
Aster as well, I think, stole a little bit of thunder.
Yep, exactly. And but I wouldn't be surprised if, you kind of baited a bunch of people into maybe going short or capitulating on the break below $30 that we got recently. And then if markets turn around, we get a little bit of a squeeze up on that, right? I'm personally not long in here, but I wouldn't be surprised if that happened either.
Yeah, I think with Hyperliquid, I spoke about this in my show earlier in the week. I think there's like two scenarios technically. Either we get a reclaim of like 37, which is like a pretty major zone that we lost, or we sweep the 10-10 lows and you maybe get a buying up. Obviously, from a spot perspective, you could just buy and hold and chill. But if you were trading, these are probably the two zones. Interesting to see today, actually, the stuff that's bouncing the most are the like revenue generating coins. And that was a real focus of mine in my portfolio video earlier in the week. Like the only stuff, last week, the only stuff that I was really focusing on were the tokens with like strong underlying revenue drivers, because I think in an environment like this, it's less risky. You like revenue has the ability to create narrative through the fact that it's generating revenue, if that makes sense. Whereas like narrative or hype alone is just a singular driver, which in this market is in like a crazy bull run that can take you a long way. In this market, I feel like it's a little bit risky just to be in plays that are like, oh, robotics might take off, so I'm going to long a bunch of robotics coins. Like that type of thinking doesn't really work that well. For me, in terms of building a portfolio, I want to like anchor my core positions around things that are making money, generating revenue, have buybacks, so I have like at least a bit more of an edge. And then, of course, if robotics picked up, or if another one of these like smaller niches popped off, I'm happy to trade, or long a beta play, or go down the risk curve a little bit. So yeah, that's what I'm noticing. I'm seeing the revenue plays doing the best. Mantle Hyperliquid today. Stuff that's doing badly, I mean, most stuff's up today. But obviously on the week, there are some things that are down. Actually, the things that are down on the week don't surprise me. Casper, Quant, Aptos, Polkadot, Pi Network. It's a lot of these like bigger tokens without, I guess, much motion. They're the ones that are down on the week, and then the ones that are up on the week. Zcash making a big recovery. Actually, I think I spoke about that last week, about how I thought there would be a meme reversion. Mantle, obviously fundamentally very strong, but it's also been a bit weak. That's getting a mean reversion. Canton as well, which I discussed earlier in the video, which is the tokenization play. So there's a little bit happening, but it's still like, I feel like calm before the storm for altcoins in general. And you may not see that storm, for lack of a better word, until Bitcoin breaks, which I also discussed, I think 2 weeks ago, this 96K level, which is like a pretty major resistance, and it's capping us for the time being.
Yeah, I think one really important thing that you alluded to as well, which I think has been weighing a lot on other altcoins that, let's say, don't have revenue or don't fall strictly in the meme bucket, right? Because like both of those things, they're like two sides of one barbell, where you either go all the way and say, okay, we're not, pretending anything here. It's a meme coin. We're just going to bid it because we're feeling risk on. Or revenues, as you pointed out, give people more kind of comfort in what they're holding, right? Especially in times like this. But one thing that crypto's lacking right now is really any driving narratives, at least in altcoins. And that's holding everything in the middle back a lot, because throughout most of the past few years, we've always had at least one or two really big narratives that people could go and bid up those altcoins again whenever markets turn. But it really feels like that's something we're lacking right now, right? And to some extent, I do think that narratives follow price more than the other way around. So, we could very well see like price start to move up, and then capital flows down the risk curve, and then some narratives come, back again. But for the time being, we don't really have any really strong narratives for people to bid in the altcoin landscape. But curious what you think about that, or if you see any really strong narratives on the horizon.
I think privacy is going to be a big one next year. I think at some point AI has to be a factor as well. Tokenization, another big narrative. Like I'm mostly looking at like the core driving trends from the traditional world, and then looking, as we discussed before, like how can you extrapolate those trade ideas into crypto. I think that frame of thinking is going to be the best frame. because this is kind of how you have to think until you have crypto specific retail driven liquidity, which we may not actually get like next year. There are many reasons why the market is extremely different to 2024. And you kind of have to accept that and change the way that you trade a bit. There's still plenty of opportunity in the market. There are still so many asymmetries. You may even see some squeezes over the coming weeks. So a lot of stuff has been beaten down. But I would just try not to, and that's why I did the portfolio video. Like I would try not to bloat too much, trying to hold like narrative plays for when they pump and just be a little bit more concentrated and look at picking off opportunities as they arise, which obviously we'll try and give you in Mars High Club as we see them on the channel. Yeah, I'm sure things like typically when Bitcoin and Ethereum compress like this for a few weeks, like typically you have a big move. It could be to the downside. Big move doesn't mean to the upside, but I would be surprised if it were to the downside with stocks looking like this. Stocks would have to pull back quite aggressively for that to be the case, in my opinion. So I think balance of probabilities, if there is going to be a big move, it's probably to the upside. But yeah, we'll play it by ear. We've gone through quite a lot. The macro backdrop, FOMC, some altcoin stuff, tokenization. So I think that's really where our heads are at heading into the next week. I would say just as a quick, maybe we'll talk about this next week, but just some quick pointers for the holidays. Like typically these are slightly less liquid times in the market. Like there typically aren't a lot of traders on the order books. That can lead to one of two things. One, really boring price action like this, where you just chop because no one really wants to heavily position. What it actually can lead to a lot of the time is actually tax loss harvesting prior to the new year. So that's actually another point, Fabian, we didn't bring up today. Like there's potential that a lot of the losses that have contributed across like Bitcoin and the altcoin market are due to the fact people are harvesting tax, and we may actually see a new year rally just off the back of that. People repositioning, especially on alts where things are a bit more liquid. Keep that in mind. Do you have any thoughts on that?
Yeah, no, that's a really good point actually, and you're right. We should have that's something that's been on my radar too. The way I usually think about that is that it has some sort of a mean reverting effect. So if we sell off too hard ahead of the end of the year, what often tends to happen is that end of the year rebalancing brings us up again. But the opposite can also be true if we rally really hard into the end of the year, and especially after a big sell-off in the months before. And the reason for that is because right now, a lot of traders are actually underwater on their Bitcoin position. And in fact, at the lows, when Bitcoin touched around, low 80K, that was in line with the average cost basis of all ETF holders. So we know that a lot of the Bitcoin holders are in a loss around here. And so if we bounce really aggressively off the lows right into the end of the year, you could get a lot of people cutting just to tax loss harvest, right? Things like that. So I do look at it as more of a mean reverting force, depending on how we go into the very end of the year. And like you said, the really big picture takeaway from that for me is that it usually tends to result in more chop in the market, right? Rather than any sort of sustainable trend into January.
When liquidity's low as well, I wouldn't be leverage trading just because like over Christmas, I just wouldn't be in big leverage positions. I think it's okay to play spot. There could be some opportunities, but you just want to be a bit careful because the books are thin and then things are going to be crazy in Jan. This is what always happens. It's like December. I mean, actually last December we had a big sell-off, but that was a bit different because you had Trump's inauguration. So there was like this huge tradable event. I don't see that this time around. So I'm anticipating a bit of a slower period and then an absolutely crazy like mid-Jan to February. That's kind of what has happened in the past for markets. So we'll still be here all the time to guide you guys through it. But yeah, cool. Let's wrap it up. We'll see you guys in the next one. Hopefully you're enjoying. Let us know in the comments if you enjoy these Friday streams, and we'll keep doing them. And yeah, Fabian, thanks for joining.
Yeah, thanks. That was great again. Until next time. Oh, and should we tell the viewers that we'll be on pause for the next 2 weeks too?
Yes, probably because of Christmas and family and stuff that doesn't involve fake coins for once.
Yeah.
So we'll pick this up in the new year. Keen to improve the format, and yeah, we can definitely build on this. But it's been I think a good thing that we've started. So we'll see you guys in the new year. But I'll see you on the channel tomorrow. See you later.